Hi, I'm Tyler Ballhorn, and this is the Stock Scores Market Minutes for March 27th, 2017. Let's talk about the action cycle, then my market analysis, and finally trade of the week on HTGM. So the action cycle. Traders make money from alpha. This is when stocks are trading on their own story or a big change in fundamentals. They break away from their correlation to the overall market, and when they have alpha, they can make market-beating moves in a very short amount of time. Now, earnings announcements are one major source of alpha, and it's the first 2 months of the quarter when you generate a lot of these earnings announcements, and they trickle off as the quarter comes to a close. And therefore, the best time to trade alpha is January, February with a rest in March or late March, and then June, July with a rest in late August, and so forth. It's the last 2 weeks and really the first week of the quarter that are slow. And so if you have found that the trading action in the last week or two has been quite slow, it's because we are in the slow point in the action cycle. There is not as much alpha right now. For my day trading watch list, I find that I might have 30 or 40 stocks on my watch list during earnings season, and that drops by half at least when the quarter slows down. All right, let's get into this week's action. We had, as I talked about last week, we had this important support zone on the short-term chart right here with a falling top. And I said if we get a breakdown through that support, we're going to see some accelerated weakness. And that's exactly what we got when we broke down right there. And we are still below this very short-term downward trend line. So we're in a short-term bit of bearishness, I guess. In the big picture, we're still in a long-term upward trend. There you can see the long-term upward trend line, but we're also quite high and away from that upward trend line. This shorter term one, remember this is a weekly chart, this one's being flirted with right now. So we could see that get broken, which would mean we'd get a few weeks of downside to that upward trend line. Now, big picture, not a big deal, but that could be a 4 or 5% drawback in the overall market. And that means, a little bit of a correction going on. That, by the way, is healthy for the market. I would like to see that because what it does is it cleanses the market of short-term sellers and motivates buyers to step in again. And you can see that after weakness, you get good rallies. And it happens over and over again. We could go back throughout time. There was weakness and a really good rally that we had since the election. So nothing wrong with weakness. It recharges buyer interest and it makes the action better in the future. Now, looking at the Russell 2000, and again, here is our upward trend line. We're still above that, so the bulls remain in control, but we're building a little bit of short-term pullback here, and that could continue for a few more weeks, taking the market back to that upward trend line. Moving on to the Canadian market, and this again is the 30-day, 60-minute charts. You can see that we have falling tops. Falling tops are a sign of pessimism, and it's essentially the sellers taking profits, the buyers lacking motivation, and I do think that this continues until that downward trend line gets broken. So short term, I recommend some caution in the Canadian market. Now longer term, we are at a point where the market could bounce because we are basically at the upward trend line. You can see that during the week this week, we went below it, but we actually were able to come back and close above. And that was this little rally late in the week. So what you want to watch for now is can this index break up through that downward trend line? If so, then you can take the caution glasses off. But right now, I recommend some caution because we are flirting with that long-term upward trend line. TSX Venture, and this is a daily chart, had a pretty good rally here that was on some strength in gold. And we're now building a little falling top here after we hit this resistance. Actually got through it slightly, but not by much. And I would be concerned if this gets broken, but if we can break this downward trend line to the upside, then we're building an optimistic pattern, which may take some time to resolve. But right now, I recommend more or less a neutral stance on this market. And of course, individual stocks in the venture can still do well because of alpha. Moving along to the bond market, everyone thought that interest rates were going to rise when the Fed raised rates. But in fact, interest rates have fallen. How do I know that? Because bond prices went up. If bond prices go up, that means interest rates go down. We are still in a bearish trend on bonds, and until that trend line is broken, I wouldn't get too optimistic about bonds going higher and interest rates going lower. This is still a bearish trend, and if we break down through this support zone, then interest rates are rising and we're probably headed down to that level there. So that's the thing to watch for in the bond market. US dollar, everyone thought US dollar was going to rally when the Fed raised rates, but strength in the euro has meant that the US dollar has actually pulled back. And what's interesting is it too has formed a falling top. That is an early sign of pessimism. The upward trend line has been broken. Again, this is a short-term chart. We went to a 3-year weekly chart. It doesn't look quite this bad. So we are at support right here, and we'll have to see if we can hold that support. If we break down through that, I think we're going to see further weakness dropping down into that zone, which means probably strength in the euro. So if you're planning a vacation to the US, maybe wait a little bit and see how that US dollar pans out. On gold, gold right at its downward trend line also. We've talked about this many times in recent weeks, and we're testing that. We've built a little rising bottom here. So that is interesting. If we can break the downward trend line, then we maybe move back up here. I still think you have to be bearish on gold because we are below the downward trend line, and what's likely to happen is it to roll over. But if it can sort of consolidate underneath the trend line and then ultimately break higher, well, then we will have, in the short term anyway, broken the back of the sellers. Long term, this chart still doesn't look great, but short term, it's got some potential to break here, just hasn't done it yet. So remain cautious in the near term. On the oil market, we of course had that weakness a few weeks ago. We are nearing support. We could go down a little more before we actually hit support, but it's pretty close. And so my expectation is we bounce soon on oil, if not already. We sort of stabilized in the last week or so. But this is really a sleepy market. We're stuck in that sideways trading range. And until we break up to the outside, up through resistance or down through support, we're just destined to be in this sideways range. So that's what you want to watch for in this chart, is what line do we break through. The VIX got a little bit of a rally, of course, with the healthcare plan in the US. I don't really think the market cares about the healthcare plan so much, except specific sectors, of course. But what it does do is it's a proxy for, how successful is the Trump administration. My personal feeling is now that the healthcare bill is not gone through, now attention can turn to the tax plan that Trump really campaigned on, and that's really what the market wants. The market doesn't care that much about healthcare, I don't think. What the market is focused on is, can Trump do his tax plan, lowering taxes, bringing back money from companies that have stashed that money in foreign domains, and all of those things are great for the market. So now that's going to be the focus, and many think that the market was going to drop like a rock after the plan didn't go through. I'm not so sure. I think now the market will have a new thing to focus on. Ultimately, I know nothing. Let's just trust the charts. Right now, fear a little bit of a jump up, but not significant. And we've seen it over and over again. We get little rallies in fear, and ultimately it rolls lower. So if you see a breakdown through that bottom line, I would run for the hills on the fear side. All right, so U.S. stocks, bullish long-term, bearish short-term. I'm a little, we're testing some support zones there. Canadian stocks, again, bullish long-term, but right at the trend line. So I've got a bearish rating short-term, and this could turn to neutral or bearish with a breakdown through some trend lines. Gold, bearish long-term, neutral short-term, but it could break that short-term downward trend line, which would raise this to bullish. Oil, neutral long-term, bearish short-term, but it is nearing support where it should bounce. Stock indexes are flirting with a break of their medium-term upward trends, but momentum remains up still. And so with trend line support intact, you have to stay bullish until that trend line is broken. Expect the bulls to remain in control in the near term, but only one bad day away from turning negative. Gold has risen up to resistance at the downward trend line. Oil is nearing support. Fear is up, but it is still relatively low. All right, let's move on to the trade of the week. I always say that, if you want to trade hot stocks, if you want to trade alpha, look for abnormal activity. We saw abnormal activity in HTGM. This is a 4 or 5 day chart on a 13-minute interval. And one of the indicators that I've created for myself is this little pink dot here, and it's something that's available to my active trader students. That little pink dot is something called an action candle. It tells us when there is abnormal buying and abnormal volume coming into a stock. And that happened on Thursday. One of the other things I like to see is when that happens and you get a rally in the morning, if you have stability into the close with relatively low volatility, it builds a good foundation for the following day's launch. So if you bought this, there's no reason to necessarily sell it here because it is relatively low volatility into the close. And then the following day, we had that big rally on HTGM until ultimately the pennant pattern right there was broken with a little bit of a downward action candle on the 13-minute. That was a decent signal to sell as a short-term trader. So that was the trade of the week, a nice little one-day swing trade, something I call an overnight hold. And I know many of you traded that. I received more than one email from some of my students saying that they took advantage of that. All right, great job. Hope that you liked the video this week. If so, please click on that like button, subscribe to the channel, tell your friends to subscribe to the channel. Have a great week in the market and trade well.